All right, guys. So welcome to this free webinar. I want to thank everybody who's here, and I also want to congratulate you guys for being here because although it is trading, every course that you guys have the opportunity to be a part of, every webinar you guys have the opportunity to be a part of, any event, just take it. Take the time to be there. It only takes a little amount of time of your day and to possibly improve your strategy, your skills, your psychology. So, congratulations on taking action on just being here, which a lot of people don't do. A lot of people want to be better, but they don't take the action of actually, being better. It doesn't do no good to be motivated when after all, it's not motivation that's going to make our dreams become true. It's action. So give you guys a little, congratulations, pat on the back for being here, and let's get to it. And like I said, guys, anybody who has any questions, just raise your hand before you guys ask the question, so I know, so we have sort of a nice control of audience. There's no interruptions, nothing like that. And at the end of the video as well, I will be doing a Q&A on anybody who has any confusion, any questions that they want answered, anything that happened to their trading this week. Maybe they have a couple questions regarding some trades that they're looking at, or even my strategy or your strategy. So let's get into it, guys. This is intro to Forex trading, and it's for beginners and also for experienced traders as well. So let's go here. So I want everybody to type, everybody who's a part of this Zoom at the moment, if you guys can please type in the meeting chat. First, what do you want from this webinar? So I can get, your objectives from this webinar sort of completed. And so we can both benefit from this. I want you guys to type in what you are looking for from this webinar. So if you guys can take like a quick 1 minute, 2 minutes, just type it in. If you guys want to raise your hand and say it out loud, that's fine as well. Highly encourage you guys, just so I know what you guys are looking for. So let's give you guys 1 minute or two. All right, so right now we're just answering the first question. So let's see, what do we have here? And my hesitation to enter trades, trust in my analysis. That's pretty good one. How, let's see, how long have you been trading for, Jimbo? And guys, I don't mean to call you guys out, so don't feel like I'm putting you guys at the spotlight. I just want to make this, as interactive as possible, and I want to personalize it where like all of you guys can benefit. I don't just want to make this a general webinar. Although it is a free webinar, I'd rather, all of you guys be able to relate and actually learn something from it. Because sometimes when you generalize things, maybe, one person may apply, but the other person may not apply. So I don't mean to call you guys out and throw you under the bus or anything. It's just, like that we can relate better. What would you say is like stopping you? Is it lack of confidence in yourself? Maybe is it lacking confidence in the trade setups that you're looking for? Are you losing more often than are you winning? Or are you winning more often than you're losing? Maybe sometimes when we lose more often, we sort of hesitate to enter trades and we don't really trust our analysis. But we'll definitely be getting into that as well. Get some nuggets to add to my strategy. all about improving. Nice, nice. Definitely. Just don't if your strategy works, just try not to add too much things to your strategy. Sometimes when we want to add stuff to our strategy ends up getting sort of a bit damaged, in the sense as it's mixed. You guys want, it's all about keeping your strategy simple. As long as it's simple to you and you can understand your strategy and you can explain your strategy and you can execute off your strategy, that's what matters. Um, I want to get better at psychology and also learn how to control my emotions. That's really big. Guys, it may sound too good to be true, or it may sound like a little falsely on a lot of people, but in reality, the only way that you'll lose your trades, or that you can actually like not lose your trades, but the only way you'll do bad in trading is if you over leverage or if you over trade. That's about it. That's the only way you'll burn accounts, you'll blow profits. It's all about not over trading and not over leveraging. And that has to do with psychology. And a big it took me quite some time. I want to say almost a year to really understand who I am, how I am, you know, did certain things of like certain traits of me, did I have to change certain things about me, like in the sense as like be more patient. Like I was very impatient when I first started trading. So to me, that was, crucial to my trading because I was often getting in and out of positions when I was in profit or when I was in drawdown. I was adding positions just out of fear that I would lose my trades. So it is very important that you guys, master your emotions and control your emotions. You're not gonna get anywhere if you don't know how to master your emotions. So let's go here. I would like to learn about trading psychology so I can keep trades open longer. Okay, okay, that's a nice one. Experience I want to improve my understanding of when to enter and exit trades. Okay. And losing more and always changing my market analysis. Okay, we'll be going over those things as well. So guys, on a scale of 1 through 5, what would you say your experience in trading Forex is? One being the least and 5 being the most. Um, try to be as honest as you can with yourself, so we can really get it down to the T. So I'm seeing a bunch of 2s in the chat, which is nice to see. Guys, I don't know what you guys think of me, but to be honest with you, I don't even consider myself out of 5 yet. Trading is a journey. It's something that takes years. And I know a lot of people dislike hearing the word years, but it's true. This trading journey is not something that's just gonna happen within overnight. It's not gonna happen within days, weeks, months. Yes, I do believe it's possible to get lucky in the sense as like people get rich overnight or people will just hit big, within weeks or so. But it's all about being consistent, right? And mass trading, like I said, this is your career. So let's not focus on getting that quick bag. We may have our personal problems, whether we are needing to clear debt, whether we need to pay for a credit card, whether we need to buy a new crib or buy a new car, or maybe we're in this, financial emergency where we need to get out of. Guys, you guys have to put yourself out of that, ignore that for now and focus on your trading and tweaking your strategy, making sure your psychology is right. Because if you guys, when I first started trading, I was in debt. So all I would think about was, oh, I need to make that trade that's gonna get me out of debt. And guess what? It would bring me more debt. I would go in the hole. I would burn my profits. But when I started saying, you know what, I'm already in debt. I'm already in the hole. or maybe there's some people who aren't in debt and they're just at, at zero, and they just want to make another income out of it. You know, you're already in that position. So why rush the process? Like, why? You've already been in that position for so long, or you've already been in let's say you have a 9 to 5 and you've been working for it for 3 years. You've been already working in 9 to 5 for 3 years. Why not wait one more year to really master, your strategy, your emotions, your psychology, and then you can actually see good progress, because a lot of us, we want to see, it's like the chart. We want to see progress just go straight up. But what we don't realize, it's just like trading. We have our higher highs or higher lows. Maybe some of us start off with lower lows and lower highs, but it's all about, drawing that level of support and saying, this is it. This is where we'll be, and identifying those levels of support in your trading journey, whether it's in your first year being the year where you're most likely going to lose profits, you're going to lose your investments. You probably start off with $1,000. You're probably going to lose $1,000 most likely, and possibly even more, and it's okay. And if you guys really think about it from a business perspective, I always like to say to everybody, treat trading like a business. That's when my trading it improved, and that was in my second year of trading. My second year of trading, I said, okay, I'm going to treat this like a business. I opened up an LLC. I opened up a bank account with my LLC. So now I have a business checking account. And I said, whatever money is in here is the money that's going to drive my trading. I would deposit money, whatever money I would have in there. And then I would say, okay, my goal was to always protect it like a mother protects their baby, right? I'm going to protect my profits, and I'm going to make sure I do anything as possible to not burn him. Next thing you know, you start getting profits, and then you start risking profits, right? Your emotions are much better. So in that first year, and businesses don't break even until they reach their second year. Like, and look at Amazon. Amazon wasn't even profitable for like 10 years, I believe. They were like just in debt. And on the 10th year, that's when they started becoming profitable. So trading is a journey, guys. It's something that's gonna help us, overall long term. Try not to look at it short term. Yes, there are short-term trades, short-term traders. Yes, it's possible to make, fast money, scalping and stuff like that. It's okay, but just make sure you treat it like a business and make sure you have a plan with this. And the last question, guys, are you a profitable Forex trader? And this one, guys, be as completely honest with yourself. What I mean by that is, are you actually making money with Forex? Are you up? My first year, like I said, guys, I was negative. I think I started trading options, and then I did Forex. So like overall, I lost about $15,000 my first year trading. So I pretty much worked literally at the end of the year. I had no savings. I had no money saved up. I had no money cash, nothing. I had no assets. All my money was just burned. And I'm glad it happened, because it happens. I was able to learn. And it wasn't until my second year that I really started making profits. So it took me 2 years to become profitable, and it's okay, guys. This will be my third year not profitable yet, and that's all right, guys. You guys don't have to look at it like a negative. You just, let's try to focus on the mistakes that we've been making for the past 1 to 3 years, and what we're going to do to not make those same mistakes. If we can identify those mistakes, we're one step closer to becoming profitable. Now we just have to stop doing those mistakes. No profits yet. It's okay. We'll make some profits, guys. And remember, there's people that aren't profitable so like for 4 years, 5 years. It also depends on how much time you put into the charts. Whether you're trading or not, you want to be looking at the charts every day. Take how as easy as it is for us to be able to go into the markets, place a trade, and get out. It should be that easy for us to be able to just go into the markets, look at the charts, analyze the charts. What I like to do is every Friday, I like to review my trades. I review my trades that I've taken, wins and losses, right? Then on Saturdays, I do a little back testing of the charts, couple months back, couple years back, and I study the charts. And it's truly why I feel like I know gold so well. And it's why I only trade gold, because my focus is to master gold. That's like my goal. So all I'm gonna do is study gold. And it's why like I know my zone so well. Why I tell people when gold gets to 1940, just buy, don't sell. Like if you see 40 pips are about to happen on sells, it's okay. You can take it, but I'd rather miss out on that. I'd rather let the 40 pips play out and then execute off the buys, right? Because what happens if you get in sells and then you lose your trade, you're gonna be like, oh damn, I missed out on I took an L on the sells and then I missed on the buys. So make sure you back test on Saturdays or Sundays. And you don't really have to back test, but it helps me. Because when I first started trading and becoming profitable, I wasn't really back testing, but I was actually putting the time. I was there on the charts every day. Whether I was trading or not trading, whether I had to go to work the next day or not, I was putting in my 2 cents in to the charts, and I was actually putting the time. And then Sunday, I just get ready for the charts. I do my weekly analysis, and then I'm ready for the charts for the whole upcoming week. I had a 17,000 payout and wasted all waiting to make profits again, but my psychology and overtrading are holding me up. So you already know what it is to get a payout, which is good, which a lot of people don't know. And the reason why it's good is because a lot of people think Forex is not real, or trading is not real. Making money off trading is not real. Fast money is not real. So the fact that you know what it is to get a payout and you felt it is good. You're one step closer. Now, what we have to do is not get crazy. Remember, you have a business. So let's focus on getting a payout again. And once you have that payout, your business will be in profit. You'll be up on equity. You'll have liquidity. So now with that, you can sort of, let's say, risk only $2,000 out of your $17,000. You keep 15,000, and then with those $2,000, everyone here knows that we can go and buy a $500 account with my Forex funds, FTMO, the prop firm of your choice, and then we have access to $100,000. And then with that, we can get another payout. So we're only risking $500 out of the $17,000 to potentially make 1 to 10%, which is, which is a good amount. And we're preserving our capital, and most importantly, our profits. So let's go on to the next slide, guys. And remember, guys, trading is a journey. It's something that takes years. I know you guys don't want to hear the word years, but it's the truth. And as long as you're okay with that, then you're on the right path. Don't focus on the person next to you or in front of you or in back of you, because we're on different situations. While the person in front of you may have $300, the person in front of them may have $3,000. And then the person in front of that person could have $100,000. So there's always going to be someone who has more, and there's always going to be someone who has less. So you're not a lot of us may feel like, oh, damn, this is my 5th year trading. I'm not profitable. I suck. I'm thinking about quitting. Stop with that negative thinking, because I guarantee you there's people who have been trading for 7 years and they're still not profitable. And guess what? There's people out there that I've met who have become profitable on their 8th or 10th year. And they're up as fuck because those 6-7 years that it took them to trade. And I know it sounds miserable. I know it sounds, like, oh, I hope that's not me. But the truth is, guys, that guy has 7 years of experience, 7 years of lessons, because every mistake is a lesson learned. 7 years of, what not to do, 7 years of what to avoid. So it's good. It's not necessarily a bad thing. All right, so let's go on to the next slide, guys. So as you guys know, Forex is for anybody who's completely new here who doesn't know what Forex is, it stands for foreign exchange. It's a decentralized global currency market that has about $6 trillion being traded every day. That is why it's so accessible for us to just open our phone. It has such high liquidity that we can just open our phone, get in positions, get out of positions. The volatility on the market is pretty insane. It's nice. So it's a nice market to trade, especially if you want to, you don't have to worry about your brokers or, prop firms not having capital pay unless you're going with like sketchy brokers or sketchy prop firms. But there's trillions of dollars being traded every day amongst banks, retail traders, individuals, and it's very easy to participate in this. All you have to do is just download, MetaTrader 4 or 5, the MT4, MT5 app, which most of us already know. And you can also participate by just going through a broker or through a prop firm of your choice. Most of us know FTMO, my Forex funds, Nations, top tier trader. So it's that easy. All you have to do is register, deposit, and you have an account. There's nothing wrong with trading prop firm and brokers. As a matter of fact, for the first 2 years of my trading, I would only trade prop firms. It wasn't until recently that I started trading with a broker, just because I want to start using my own capital. I want to start leveraging my own liquidity, and I know I can hold positions for a good amount of time. I don't want to have to. I don't want a prop firm to have to tell me I can't hold trades over the weekend. I can't hold trades overnight, or I have to close them, or that whatever excuse is. I know that I can put low lot sizes and just hold, which is a part of my strategy with gold. As some of you guys know me, I trade for you guys. You guys know how I trade. There's several risk tolerances that you guys have to understand, as a trader. There's conservative trading, there's moderate trading, and there's aggressive trading. This is very important for you guys to understand why. Simple being, when you're being conservative, you don't really want to focus on getting that 10% in a month, or that 20%. That was more aggressive. And I think prop firms have spoiled our mentality to the sense where we're used to fast profits, and we're used to making money so fast that we think anything less than 10% in a month sucks. But that's not the case at all. If you really think about it, if you go to take your money to a bank and you put it in a savings account, that money is going to make it. Yeah, it'll make you money slowly but surely. It'll make you the money, but it'll make you like a percent is what it's going to make you, probably less than a percent, and at most 2% in a month, you know. And I truly think it's less than a percent. But that's something like that's conservative. So if you have a prop firm account and you're funded, there's nothing wrong with getting 1% payout, 2% payout. It's all about being consistent. Like I had told you guys earlier, there's people who can get a payout and not get a payout for the next 3 months. There's people who can't even get funded. There's people who can't even pass the second or first phase. So when you're funded, just think about what your goal is as a trader. What type of risk tolerance suits you best. If you're someone who's patient, you can understand and you can put up with conservative. But if you're someone who's impatient and you like fast pace, you like things fast, you like things now in this very moment, then aggressive trading would be best suitable for you. I'm sort of moderate. I like to be aggressive sometimes, but I also like being conservative. I'm okay with getting my 2% payout in 1 month, because I don't think it's gonna I'm not here to get a payout so that it can change my life. I'm gonna be the one who changes my life based off my actions, not the payouts. And then sometimes I'm aggressive because I have profits. I can risk my profits, and I'll sort of take calculated risk to either focus on high risk to reward trades. And then that's how I get my account up. But when you're conservative, you're constantly depositing money into your account, right? Your balance is just going up. Your overall balance is just going up because you keep depositing, but your equity remains the same or it just goes up little by little, right? So let's say somebody who has a live account with a broker, you deposit $100 weekly, your balance is going to go up by $100 every week. But if you don't take trades, your equity is going to remain the same while your balance is going up. The next thing you know, you take a nice trade, then your equity will go up and up and up little by little. When you're moderate, you start to take aggressive trades. You start, some trades will be conservative, but your equity will outweigh your balance as long as you're in profit, of course. Then next thing you know, you'll see your equity be above your balance. And when you're aggressive, your equity is just way above what your balance is constantly going in. So I could be putting in $100 every week, but I'm out of the $100, let's say I'm risking $75, and let's say I'm winning, right? My equity is obviously going to be at the top and my balance is going to be lower. But well, the income coming in towards the balance is going to be lower. So make sure you guys understand what type of risk tolerance suits you guys. As long as if you guys, because I promise you guys, a lot of you guys are just taking trades, and you guys are just taking trades, and calculating the risk based off the account size that you have. And oh, I'm gonna risk 1% to make 1%. Oh, I'm gonna risk 2% to make 1%. Try to understand who you are, how you are. If you want to be an aggressive trader, there's nothing wrong with that. Just make sure you have a plan that suits that aggressive style of trading. Always it's important to have a trading plan and trading rules. If my trading plan, it says risk 1%, a week, there's no way that I'm going to risk 1% on one trade, because that means that based off my trading plan, I'm going to have to only risk one trade. And then if I lose that one trade, 1%, I'm done for the week. So always, like for example, with me, I keep it moderate. If I lose 3 trades back to back in 1 week, I'm done trading that week. If I lose 2 to 3% in 1 week, I'm done trading that week. A lot of people say, oh, I lost 2% this week, I need to make back my profits, I need to make back the money but why does it have to be now? Why do you have to make back the profits this week? If you know that if you wait 4 more days, 3 more days, 5 more days, your account is still going to be valid, you'll still have capital, you'll still have an account to wake up to, versus trying to make back the 3% in 1 day, 2 days. That we got to get that idea out of our head. So my trading plan, for instance, is risk 1 to 2% per day, right? And it's actually risk 1%. I've lowered it to risk 0.5% to 1%, because the last time I've risked 2% a day, I don't even remember when. But for example, this past week, I had 2 trades that I lost back to back. I wanted it to take a third trade, but I was well aware that it was Wednesday. And if I would have taken that third trade, I was done trading. I had to stick to my plan, and I didn't want that to happen. So what did I do? I waited for Thursday to come. I then took a third trade, and I only risked, I think, 0.25%, because I still wanted to be able to, I had taken 3 losing trades, but I was still down for the week, like 0.5%. So I was like, I have another 0.5% to play with. My fourth trade was a win, and then I made back some of the profits that I had lost. So it balanced itself pretty well. So make sure you guys have a trading plan that matches your trading style, your psychology, what type of risk tolerance you would like to trade: aggressive, moderate, conservative. And like I said, guys, if you guys have any questions with this, if you guys don't really understand which way to go with, you can show me a DM and we can talk about that as well, and we can find a trading plan that suits your psychology, or suits who you are and how you are. I know that for some of us that we trade prop firms, it may be hard to be conservative or moderate, because they ask for 10% in a month, which, like I said, I truly believe 10% a month is aggressive. And you guys also have to understand this: prop firms, they make it hard for you to pass accounts. They make it hard for you to keep accounts, and they do it for a reason, because their goal is, it's not that it's their goal. They want to see people pass, but they make money by you failing. And I know this, maybe some of you know this already, maybe some of you don't know this already, but it's very important that you guys understand this. Prop firms make money by you failing. Why? Because the more you fail, the more money you give to them, the more accounts they'll provide for you, the more money you'll be putting in their pockets, the more liquidity they're grabbing. I'm sure they have liquidity by the owners, that they put in a certain amount of money, and that's the liquidity they have. But in reality, they depend off you guys. If, let's say, there's X and such prop firm, and everybody who's in this Zoom, let's say we all hit, and let's say we all win, I can guarantee you, chances are they probably won't be able to pay us out. if it's like a big payout, because there's such high amounts of people. That's why you see sometimes when people in volatile times with there's like high market news and people are hitting big with these prop firms, some prop firms have gone down. I'm sure we know a lot of prop firms that have gone under because they haven't been able to pay. But it's reasons like that. That's why let's 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 not keep giving money to the prop firms. Let's start keeping money and let's start making money off prop firms. So investment options, guys. And this also sort of relates to with the previous slide. Remember, guys, there's three different styles of trading. There's scalping, there's intraday, and there's swing trading. You guys have to understand something about this that is very important. I know some of us, we want to swing trade and we want to catch those high risk reward trades, like those 1 to 10s, those 1 to 5s, those 1 to 4s. Yes, it's possible. It requires a lot of patience. For example, gold. I'm gonna use gold, guys, because that's what I traded and it's what I'm good at. You guys can ask me questions with any other pairs as well. But with gold, I was looking to get into a swing position this week. It didn't come, it never came because I think we finished the week with gold at 1955, around there. I had an entry target at 1940 to get in on gold for swing positions. Now, you have to understand when you're scalping, you're only typically looking at the 1 minute time frame, you're looking at the 5 minute time frame, you're looking at the 15 minute time frame and the 30 minute time frame at most. You're in these positions within seconds, you're getting in and out. You're within these positions within maybe a couple minutes, and at most an hour or two or a couple hours, right? You don't really want to be in those positions for more than a few hours. If you are in those positions for more than a few hours, then that trade becomes an intraday trade. Also, typically when you're scalping, the reason why you can make a lot of money is because you're constantly getting in positions, right? In and out, in and out, in and out, in and out. The misconception with that is a lot of people think the more you trade, the more money you'll make, which is wrong, because it can also be vice versa. The more you trade, the more money you'll lose, right? And then there's also people who are just in weird positions where the more they'll trade, but then they're still at the same spot at break even, which I have seen, and it sounds kind of ridiculous or funny, but I've seen it. They'll be in 15 positions and then they're still at break even. Just how I've seen people be in 15 positions and then drawdown, and then people in 15 positions who are in profit, you know. And then you have also people that over leveraging method where you're in and out, but because you, let's say on a 100K account, you put 10 lots, you're going in and out fast. You're just trying to make a quick little $300, which is, 3 pips, quick 3 pips, quick $300, bam, in and out. And then another position, 10 lots, quick 2 pips, in and out, bam, So you're typically in shorter time frames and you're typically over leveraging. Now, again, there's nothing wrong with that strategy. Just make sure you have a plan that can help you be successful with that strategy. Okay. And make sure you know what time frames you're using. Make sure you're looking at the right time frames. And then when you're leveraging, just make sure you're not over leveraging or over trading, guys, and you'll be successful scalping. When you're intraday trading, your positions are closed before sessions or it ends at the end of the day. You're typically looking at the 15-minute time frame, 30-minute time frame, 45-minute time frame, 1 hour time frame, maybe the 4 hour time frame at most. You're not really looking above the 4 hour time frame. Maybe you're looking at above the 4 hour time frame just to make sure that you understand what the market structure is, but you're in those positions for a few hours. You're in those positions for at least most a day, maybe 2 days max, which is really becomes a swing position once you're more than a day or two. Your leverage is a little lower. You can you can be in a position and you're 5 lots, for instance, on a 100K account, and you can actually hold the drawdown a little bit, and then you can see your 1-to-1, or you can even see your 1-to-2 or 1-to-3 play out, And then you have swing positions which is on higher time frames, right? Your 1 hour, your 4 hour, your daily, your weekly, your monthly. You'll see positions being traded from the beginning of the week, closing out at the end of the week, maybe at the beginning of the month and closing out at the end of the month. Maybe you'll often hear sometimes traders, swing traders specifically say, "Oh, I'm gonna hold this trade until the monthly candle flips." You know, then that they're most likely talking about a swing position. You know, when you're holding for days, weeks, a month. You know, when you're looking at it's pretty rewarding now because you're catching these. That's when you start catching these 1 to 4, 1 to 5, 1 to 10 trades. But you do tend to also sometimes you'll lose a little more than you win, but that's why swing traders typically have a tight stop loss. You know, they'll have a small stop loss. It's not so big, versus intraday or scalpers. They'll have a bigger stop loss, 30 pips to make 30 pips. Or versus a swing trader, they'll have like 10, 20 pips stop loss. That's how I do. I keep a 20 pip stop loss, 30 pip stop loss, and I'll just let it go. But if I lose, I only lose a little bit. But if I win big, which is why some swing traders typically end up being more successful than scalpers because, yeah, the swing trader will have more losing trades than the scalper would, but the swing trader will have more profits than the scalper would. So make sure you understand what type of trader you are. Try to understand your psychology, try to understand your emotions, how you are, and then which one of these suits you best. I'm more of an intraday trader. I'll scalp, I'll also swing. But most often my positions are, you know, within within a couple minutes to hours, and then sometimes I'll even hold positions overnight. So when I'm live streaming, I'm constantly only scalping. Very few times am I live streaming and then I'll hold a position past a session. Every time I'm live streaming, I'm always scalping because we're there live streaming to catch trades, to better our psychology, to answer questions, that's my time for journaling. That's my time for analyzing the charts. Off the live stream, I'm swinging. I'm constantly swinging. That's why you guys will see me post. A lot of you guys who follow me on Instagram, you'll see me post 1 to 6 trades, 1 to 10 trades. And then the people who I trade for, you guys know as well, those trades that I'm talking about. You'll see high risk to reward trades where you'll see with just one lot, I made $1,200. A lot of people will be like, what the fuck? Like, how the hell did you do that? It's because I understand my zones very well. I have the psychology to be able to hold. Like, I understand that when I'm up one lot for $500, a lot of people will be like, you're not gonna close. I'll be like, no, why not? And it's like, because my objective is to catch 100 pips. I'm trying to catch, no less than 100 pips, and I'm trying to catch as much pips as possible. 200 pips, 250 pips. That's swing trading, and it's really nice. It's really rewarding. But like I said, if you're someone who's impatient and you're someone who likes things now and fast, swing trading may not be best for you. Try to go with scalping. And if you're someone who likes to be patient and you like delayed gratification, meaning you would rather get paid big over, after waiting a certain amount of time, then swing trading might be best for you. So my investment strategy, guys, is I like to buy and hold. For example, with gold is the one that I can relate to the most with this. I like to hedge as well, and I like to cost average. What does this mean? When I'm buying and holding, guys, like I said with gold, right? When I'm in 1940, let's say I would have hit 1940, my target hit, I'll get in with one lot. If gold starts to go down 30 pips, I'll still hold, but instead of closing my position, I'll cost average. So I'll average down on my position. I'll just add another position of one lot at a lower price, right? So now I have two positions, and then when that one lot at the bottom gets to my second, when my second position gets to my first position, Now I'm pretty much at break even, right? Very few times I'll go against my position, but sometimes I will, just to protect myself, especially if I'm swinging and I truly believe that gold will hit a certain price level. You'll see me scalp certain sells just to protect my trade, and also just to make sure that I can maintain that position, so I'm not seeing too much drawdown. And then once I hit my certain level of entry, because you always want to have certain target levels, right? You don't just want to say I'm going to buy here and I'm going to hold until there. No, you also want to have levels where you're going to say, okay, this is where I bought, this is where I'm willing to hold until, this is where I'm willing to re-enter, this is where I'm willing to re-enter in profit, this is where I'm willing to secure profits, right? You want to plan your trade. Always plan your trade. This is my plan, right? My strategy is I buy. If it goes down a certain amount of pips, I'm buying again. If it goes a certain amount of pips again, okay. Has market structure been broken? No. Okay, we're buying again. But again, guys, that one trade has multiple positions, because sometimes you guys, not you guys in specific, but sometimes certain people, they'll be like, yo, what do you mean one trade, different positions? You're in like you're like in three trades clearly, but it's the same position, right? I'll be like, no, what I mean is one trade can have three different positions. One trade meaning I got in gold buys, but I have three different gold buys: 1945, 1940, 1935, right? Three different trades, three different positions, but it's the same trade. It's the same gold buys, and they're all at the same profit target level, 1960, right? Now, that is my plan. I'm averaging down on my trades when in drawdown, and I'm pretty much hedging in a way where, like, when I'm calculating my risk properly. And if I'm in drawdown, by the way, if let's say my stop loss hits on those three trades, because those stop losses will be the same, it'll only be like 1% that I'll lose, only, and it's one lot. That's why I don't like going in more than two lots. When you guys trade funded, you guys will understand that your psychology changes. And yeah, it's possible to be able to trade for 10 lots and be able to hold. But the truth is, if I get in 10 lots on these positions and I'm in drawdown 20 pips, you know, that's $2,000 that I'm losing, and the daily drawdown with these prop firms is 5%. So it's possible to lose the 5% in one day. So I would rather just put in one lot, hold it, and if it hits my stop loss, I only lost $1,000. With three different positions, they all amounted to $1,000. But if my position wins, if my trades win, guess what? With risking 1%, I made 5%. What is the risk? ¿Cuál es el riesgo de ese trade múltiple posiciones? ¿Cuánto porcentaje arriesga por trade? So to those that don't know Spanish, guys, he's asking, what is the risk with that trade of multiple positions, right? What is the percentage that I would risk per trade? I would only risk 1%. So I'll get in one lot at a certain price. If it gets down to about, let's say, 30 pips, that would be like $300, right? I'll get in again one lot. If it goes down another 30 pips, now I'm down on one position, 60 pips, right? So that's $600. And then on my second trade, I'd be down $300. So that's $900. That's almost 1%. So in that case, I will not get in anymore. I would just hold it. If it hits my 1%, it hits my 1%. And I'm gonna answer in Spanish just in case, just so you can understand. Kevin, lo que quería decir es que mi riesgo sería nada más 1%. Entonces, si yo entro en un trade, una operación, y pierdo 30 pips, ¿verdad? Con un lotaje, estoy en negativo $300. Entonces, entro de nuevo, un lote. Después, digamos que pierdo 30 pips de nuevo. Ahora mi primera posición está en negativo $600, ¿verdad? 60 pips. Y mi segunda posición está negativa 30 pips, que serían $300. Un total de un monto de $900, casi 1%. Ahí dejo de entrar posiciones, aguanto hasta que mi stop loss se pegue, y si mi stop loss no se pegue y termino en ganancias, termino recuperando lo que iba a perder y estoy en ganancia de un 3% posiblemente. So yeah, next slide. Also, guys, you guys will have to understand this as well. Investing in long term. And what do I mean by that? When you're investing in long term, whether you're entering these trades or not, you guys, I put gold, NAS, and the DXY because that's what I trade. It's what I relate to. Just you guys can plug in what you relate to there, right? It allows you to also grow your portfolio, which is why I tell people have multiple accounts. You know, have a swing account, have a scalping account, have an account where you can just you want to make profits and you just wanted to, you know, literally scalp the head out of it and make as much money as possible. And then have that one account that will be like your savings account in a way, you know, your account that is just gonna grow your portfolio, which is I have that one with gold. With gold, I have just one account that just I have gold since 1935 and I'm just holding it until 2500, you know. The DXY is the inverse pair for gold. It's something that I use to as a confluence. I'm constantly looking at the DXY, at the dollar. If the dollar is going down, gold's going up. If the dollar is going up, gold's going down. So I'm constantly looking at the DXY because it'll affect gold, and I'm constantly looking at gold because it'll affect the DXY. That being said, it allows me to set goals for myself in trading. And also I tell myself, okay, my goal is to be able to trade gold at this level and hold it until 2100. We all know that gold record highs is 2075, right? So my goal right now is to hold this trade until record highs. I'm only in half a lot, guys. Half a lot with $100,000 account. That's if I lose this trade, it's nothing. It's literally 1% that I'll lose, I think, or 2%. But if I win this trade, it's gonna pay me pretty nice. So have goals, you know. What are your goals? What are you trying to make short term? Are your goals short term? Are your goals long term? Try to identify your goals and separate them. Don't get them mixed together. I'm more of a long-term person. I like long term because you know I'm scalping and short-term goals. It's nice and all, but it doesn't fit my trading plan. It doesn't fit my rules. It doesn't fit my psychology. I'm more of a long-term person now. I have other projects as well aside from trading that are long-term with the objective of long-term capitalization. So it's why I'm more of a long-term trader. So this one, like I said, guys, it relates to the last two slides. Understand who you are, how you are, and what type of trader you are, so you can make your goals, you know, and you can have comfortable goals. You don't want to have unrealistic goals like, oh, I want to make, you know, $5 million from here to the end of the year. You know, like, come on, that's a little unrealistic. Like, even experienced traders don't have those types of goals. Like, think of goals that will help you get to that goal. Like, there's nothing wrong with having that long-term goal as to make $5 million in a year. But what are you going to do now? What do you have to do? What goal do you need now to be able to get you closer to that goal to make $5 million in a year? You know? Now this one relates a lot to psychology, guys. So when the market falls, guys, don't panic. Meaning when our trade is not going our way, don't panic. When our trade analysis is wrong, don't panic. When we lost 3 trades in a row, don't panic. Literally, just take a breather in and breathe out. Breathe in and breathe out. Relax. The markets are not going to go anywhere. You know, I know oftentimes we will get stressed out and we'll revenge trade, we'll over leverage, we'll over trade, will our mind will get cloudy. And since our mind is cloudy, we're not thinking reasonably. And because we're not thinking reasonably, we're not trading realistically. And because we're not trading realistically, that's when things start to seem like a storm and like it's the end of the world. But guys, you don't understand that you have to step yourself outside of the markets, visualize the markets, understand the markets. Okay, I lost 3 trades. It's not the end of the world. Let me take a step back. Let me take a look at the markets. Okay, the markets are failing. My trades are failing. Okay, now what am I going to do to stop failing? What am I going to do to, to get back from this loss? Thinking stress, like let's reflect. Let's take a moment to reflect of those times that we've traded stressfully, or that we've traded with anger, or that we've traded emotionally. Did you win? Did you lose? How did it go for you guys? Okay, that being said, it I'm pretty sure that most of your responses are not good, not a good one. So let's start changing our mindset. Let's start changing our attitude. Let's start thinking realistically. Let's start, handling our emotions well, because after all, emotions is can kill a trader. Not well, literally for real. And I hope it doesn't apply to anyone here. But it can literally like just kill our trading, and it can end our trading career. And greed is a trader's worst enemy. Let's avoid those things, guys. Let's handle our emotions. I know it can be very, it can be very hard for us, but I promise you guys, what's gonna happen is this. Let's also practice patience. I wanted to add to that. Patience pays a lot. When you're in a line, let's say you're going for a cup of coffee, maybe you're gonna go get food, and you're in line, and you're in a rush. You can do two things. You can either be patient and wait for your turn, and you will be given what you wanted, or you can just leave, right? But then we have people who like to just get angry at anything that happens, right? Somebody honked while they're in line, and they'll be like, oh, like, oh, and they start getting like aggressive, and they start screaming, they start getting anxious. But then you end up getting what you still want. Now you just went through all of that. You just put your mind, you literally hurt your mind, you hurt your brain, because every time we get into a fight, every time we get emotional, every time we get stressed, we're just doing damage to our brain. You know, let's just breathe in, let's breathe out, and let's think to ourselves. If I scream at the person in back or next to me, what am I going to get out of it? Am I going to win this or not? Let's start thinking, okay, if I'm patient and I stay calm and I enjoy this moment. As a matter of fact, from now on, when you guys are getting impatient, I want you guys to think about this. How can I make the most out of this? That's what I started doing. I was very impatient. I used to always drive fast. I would always take yellow lights. I would always run. I would always, if I wasn't getting it now, okay, I'm on to another place, and then guess what would happen? I'll go to another place to get what I wanted now, but then I would have to wait even longer. So now I wasted even more time, and I wasted even more money because I had to drive to another place, and then it costs gas to get there. So I end up losing even double. And in trading, that's what happens. When we get impatient, we lost a trade, we lost a second trade, we're getting impatient, we want to make back our money now, and then we end up losing even more than what we originally intended to lose. Let's start thinking about how we can be more patient. When we're in line, take the time to reflect. If let's say you have to wait 15 minutes, now you have 15 minutes to reflect on whatever you did wrong that day. Maybe you want to think about ideas. Maybe you want to think about what you're going to do next. But it's 15 minutes of free time, 15 minutes of peace time, and it's patience that you're practicing. So now when you go back to the markets, you're going to go back to the markets, and you'll be rewarded through patience. Now, when you want to get in a trade out of impulse, you're not going to get in a trade out of impulse because you practice patience. And then the more you practice patience, the more patient you'll be, and the more rewarded you'll be, and the more satisfied you'll be, and the more trades you'll win. Because believe it or not, our daily lifestyle affects our trading lifestyle. And, I think a lot of us, I think a lot of us depend more off of our trading lifestyle because we think it'll change our personal lifestyle. But the truth is, if we don't focus on our personal lifestyle, then our trading lifestyle isn't going to do so well. Let me just mute somebody there. Thank you, brother. So yeah, guys, always remain calm. Even when your analysis isn't right. If your analysis isn't right, guess what? You're still winning because, you know, if your analysis is wrong, you're still not in the trade. You still haven't lost money because you haven't gotten in. It's just an analysis. And there's nothing wrong. Would you rather your analysis be wrong or would you rather your trade be wrong? Your trade being wrong costs more money than your analysis being wrong. So if your analysis was wrong and you noticed it was wrong and you caught the fact that it was wrong, guess what? You it was a winning trade because a no trade day is a winning day and a break even trade is a winning trade. So the fact that you were able to see your analysis was wrong, that's a step closer to becoming profitable. You saved yourself drawdown, you saved yourself losing money, you saved yourself getting mad and emotional. So then you can just focus on, you know, what can I now you have to focus on finding reasons why your trade analysis was wrong. After you find those reasons to why your trade analysis was wrong, then you can find another trade analysis and just wait. And the more trade analysis, the more I want everybody here this week to look for at least 5 trade analysis and don't take those trades. Just look for a trade analysis and just mark it up and don't take it. And then you're gonna realize something. You're gonna be like, damn, like I was patient and this played out to exactly how I wanted it to play out. And you're gonna feel even better. Somebody put facts, bro. There was no way I could be out having fun and getting wasted and expecting to be good in the charts and shit did not fly. Exactly. And guys, I'm gonna give you the perfect example. Like last night was Friday, you know. I had the option to go out. I finished working on this PowerPoint and not just on this PowerPoint, but I finished getting ready for this webinar so you guys could have the best experience possible at around 12 o'clock at night. After that, I had my little fun time. I literally met up with some friends for 1 hour. I literally told them I was only going for 1 hour. They were there drinking. They were already drunk. You know, there was music playing. They offered me a drink. I politely said no. I didn't want to drink because I knew that if I drank, I was going to wake up today feeling tired. Guess what? I only slept for 6 hours. I woke up at 8, and because I did not drink, I woke up feeling nice. I woke up feeling fresh. I was able to take care of the things I had to take care of today. And I was ready and I'm here with energy and I'm here ready for this. You get me? So you guys have to also take that serious. Like, trading this is your job. This is your career. This is your business. If you guys don't wake up, I trade New York sessions. So I literally wake up to trade. If I go out the night before, I'm gonna be I'm gonna be exhausted. And especially if you guys are pulling up to my live streams, it's not fair for you guys. It's not fair for you to have me on the live stream, and then the night before I'm going out getting drunk, and then the next day I'm not even 100% mentally, and I'm just calling trades, and then you guys are taking my trades thinking that it's gonna win, but in reality I'm not even feeling like myself. It's not fair for you guys. So therefore, it is, important that you guys have the discipline and that consistency. A lot of people, they're they're scared. They want to go out because they don't want to regret what they're gonna miss out on. But would you guys rather regret missing out on a one night out, or that one trade that's gonna blow your profits, or would you rather regret not taking the opportunities that you could have taken to be better? And it's what a lot of people like that you see nowadays. We all have that. We all have those friends. We all have those family mates. We all have those people in our life that want to go out and get drunk, and they want to gamble X amount of money on a game. They want to gamble a certain amount of money on trades, you know. But let's not get attached to those bad habits. Let's have good habits in our life so we can have good trading habits, right? The more good habits we have in our personal life, the more good habits we'll have in our trading life. And the more disciplined we are as a person, the more disciplined we'll be as a trader. the more patient we are as a person, as a human being with others, the more patient we'll be with our trades. Oftentimes we get mad at people because they do stuff to us or they're just in their own little world. But the truth is, majority of the people are in their own world most of the time. They're not really thinking about you or others. Most people think about themselves. So when something happens, it doesn't go your way. Let's take a breathe in. Let's breathe in and breathe out. Let's be patient. Let's be happy, and let's just move on with our life. I promise you, our trading is going to be better. For how long do you stay in a trade? You close positions when the sessions end. So, like I said, I always plan my trade. If 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 I get in, I'm just gonna give an example to be as realistic as possible. If I want to get in on gold at 1940 and price never gets to that area, then I'm never going in, right? Now, if I see that, let's say we have a trend line and it respects that trend line and it hits 1940, I'll be in that trade until market structure breaks, until trade starts to not go my way. And I'll hold that trade until I hit my profit level, which is, let's say, 1960, right? So that's about 200 pips. Yeah. So when that trade hits, it can be within a day or two. It all depends on your plan and how long you're willing to be in a trade, right? Sometimes, like when I'm live streaming and I'm scalping, I'm really, if we start seeing, like, if we start getting in a range, if we start getting rangy and then price starts rejecting like the buys and I'm in buys, then I'll just get in at break even. I'll get in before like I start my day, because I don't want to be in a trade and then I start my day and then I forget about my trade, because it has happened to me where I'll be in a live stream, I'll call a trade with the intentions to be in and out before my in and out before my live streaming session ends, right? But then I'll be like, oh guys, I'm gonna hold this trade. I'll let you guys know when I close my trade. But then guess what? I finish live streaming, I go about my day, I work out, I go and eat, I do other things, and then, oh, my trade, damn, I'm in drawdown. And then, I never ended up like telling anybody. So it all depends on on that one trade and what I planned out for that one trade. If it's a scalping trade, I'm not trying to be in the trade for more than 1 to 2 hours. And if it's in profit, I'll just close the trade in profit. If it's in drawdown, I'll close the trade in drawdown. I'm not really trying to be in that trade, because anything else that happens was not part of the plan. If I'm in a swing trade, and I get in and it hasn't hit my stop loss or my take profit and we're just there ranging, I'll hold until either the week is closing. So typically, let's say I get in a position on Wednesday, I'll try not, and it's a swing position, I'll try to close before Friday midday, because session closes at Friday 4 p.m. The markets close at Friday 4 p.m. So I'm not really trying to be in the trade over the weekend. And then anything else outside of that is not part of the plan. I hope I answered that question. Um, so yeah, let's go here. So guys, this is like the end of the PowerPoint. I want you guys to ask me any question you guys want. Guys, remember, don't be afraid to, like, ask questions. This is completely free. Like, take advantage of this, guys. I know, this is my free webinar. I want you guys to have the best experience possible as well. And, I'm not here to make money off of you guys. I'm here to help you guys out. I'm here, take advantage of me. I'm sure a lot of you guys can't afford a one-on-one. This is why I put a question and answer section, so you guys can ask me those questions and we can have that little time here. I know a lot of you guys are shy. You only miss the question. You only miss the shots that you don't shoot. And there's no such thing as a stupid question, except for the question that you did not ask. So that being said, does anybody have any questions on any slide, on any trade that happened this week? Maybe with my trade, your trade, maybe prop firms, brokers, strategies. So I've never tried a challenge, just been trading my live. You think I should continue developing my consistency on small trades or go for a funded? Great question. That's actually a really nice question. So, you've never tried a challenge and you've only been trading live. How has it been going with your live? Are you profitable with your live account? Like, have you been able to flip your account? Have you been able to like consistently make profits out of your account? And how do you feel with your how long have you been trading that live account for? I'm curious. Because because the truth is, let's say it's $100 live account, right? If you've already flipped those $100, try to keep doing it, be consistent on it. And that's a great thing that you're working on your consistency, because once you feel ready to trade larger capital, you'd have already had gone through that phase. You already know what it is to flip 100 to a 200. So if you, like I tell everybody, if you can't flip $100 to $200, what makes you think, respectfully, what makes you think that you'll be able to flip $1,000 to $2,000, or 10,000 to 20,000, or 100,000 to 200,000? You know, are you going to show your strategy, brother? So I went over my strategy, guys. If guys, my strategy, like, let me pull up TradingView real quick. Hold on. Let me. No, I'm answering questions right now. Wait, hold on. I'll get back to you, Walter. For the sway market broker, what account type is better? ECN, no commission, etc. Damn, I actually have that account. I'll reply to you on that one. And it's not live. Oh yeah. AR, shoot me a DM and I'll tell you. I believe I have an ECN. I think there's like two different types of ECN accounts with sway markets though. But I have an ECN account. And by the way, the only difference between no commission and all that is spreads. If you pay for commissions, you know, your spreads will be a little bit less. And if you don't pay for commissions, your spreads are gonna be way off. So so somebody said I'm in 3 years in for the first half. I was just straight gambling. I'm in 3 years, and for the first half, I was just straight gambling and blew a few. Then for the second half, I've just been working on being consistent, but so far I've had more losses than wins. Once I started to focus more on listening and watching the pros and how they handle themselves, I started to attempt to replicate the way they think and act on their strategy. So if you're losing more than you're winning, there's probably something wrong with your strategy. Okay. You have to be able to identify why you're losing. How many confluences are you having when you get in a trade? Are you getting in? Are you going against market structure? Are you over leveraging maybe? Are you over trading? So just because you've been consistent doesn't mean you're going to succeed. You also have to stick to maybe your trading plan is wrong, or maybe you're not following your trading rules. So if you want, DM me your trading plan and your trading rules, and then we can go from there as well. But try to make sure that your trading plan is working and that your trading rules match your trading plan. And also make sure you're leveraging correctly, and make sure that you're also not over trading. And also, most importantly, how you'll know if your strategy works is if you can win a few times. If you can win a few times with your strategy, then maybe you don't need a new strategy. Maybe you just need to tweak your strategy a little bit to be able to catch more wins. Definitely, when I look back at the old accounts, I would get impulsively way too early, over leverage, and trade at random times. So you're not doing those things now. Yeah, just try to avoid those things. And like I said, focus on more on your trading plan now. Now you know what not to do, and let's focus on getting your trading plan right, so that your trading rules also match your trading plan, and so you can catch more wins And also let's focus on your strategy. Let's see, just DM me and I'll get to you on that as well. Any other questions, guys, on anything regarding the charts, regarding accounts? And guys, also I want you guys to know if you guys can DM me, but also if you guys are interested in a one-on-one, only the people who are here on this webinar will have access to that one-on-one price for just $24.99. You can get a one-on-one with me. It says 1 hour, but in reality, can be 1 to 3 hours or however long it lasts us. I don't really care about the time. I just care more about you guys getting what you need out of it and improving your trading. So if you guys want to take advantage of that as well, you guys can take advantage of that. It will be open, so you guys can click on it whenever. How many trades do you take a day? So I only take 1 to 2 trades a day. If let's say, and mind you, every trade I take is normal on average. Lately, for the past few months, I've been averaging 0.5% per trade, and I've been only trading 1 to 2 a day. So I try to limit myself to no more than 2 trades a day. You guys don't want to trade more than 1 to 2 a day. Always, and it's also in my rules, 1 to 2 trades a day. Also, let me let me put this here as well for you guys. If you guys want to take a screenshot of this, this was one of the first this trading plans and rules that I have. If you guys want to see this, you guys can take a screenshot of this, copy it. It could help some of you guys. Some of you guys may be able to relate to this. So you see here, risk 1 to 2% per trade. If you are down 5%, you will not make it back in one trade. That's something I would tell myself. Wait, be patient, stop gambling. This trade, I've actually have been thinking about changing my trading plan lately, because I've actually been better than this, in the sense as now I'm only risking 0.5% to 1%. I'm not risking 1 to 2% per trade anymore. I'm only risking 0.5 to 1% per trade anymore. No, thank you very much. It was very illuminating and different. I'm glad, Jimbo. I'm glad you were able to I'm glad that it had that effect. And guys, by the way, I will be doing these webinars more often. This is my first webinar too, so I sort of just, I tried making it as best as possible for you guys, and I hope you guys really enjoy this webinar. There definitely will be more of these, and especially free, because I know a lot of people don't have the money to be able to pay for webinars and all that. So I will be doing more of these. How much percent would you use to pass 100K account? 1 to 2% is what I would risk. You don't need, you can make, just make sure you have make sure you're catching your 1 to 1s at least. Like if you're going to risk 1%, make sure you're catching 1%. And you remember, you have at prop firms, they give you 10 minimum trading days. Now I'm noticing that they're reducing that to 4 days. But guys, keep in mind, remember what I told you guys. Prop firms will do anything possible. Well, they're not going to do anything possible for you to fail unless it's some sketchy prop firm. But prop firms, they want to see more people fail than win. So the fact that they're now giving you 4 minimum trading days, think about why they're doing that. Because they know a lot of people are going to over leverage, and they're going to overtrade, and they're going to try to pass accounts in 4 days. But 10% in 1 month alone is aggressive. So 10% in 4 days is super aggressive. So take your time with it. There's a reason why they give you 30 days to pass your account. So just focus on 1% a day. If you focus on 1% a day, trust me, you will pass it. Remember what I told you guys earlier. The only way you guys can fail in trading is if you over leverage and over trade. So in order for you to literally fail your account, you need to fail 10 trades in a row, meaning you lose 1% per trade, meaning you lose 10% overall. So it's more important to focus on the percentage based rather than money based, correct? Correct. Absolutely. I don't focus on money anymore, because money has a psychological impact on your mindset. When you're up, let's say $2,000, you want to try to make $5,000. And when you're up $5,000, you want to try to make $10,000. But when you focus on the percent, sounds much better. And then you're much safer. Yeah. So I always focus on the percent, guys, never on the dollar value, always percent. That's how the banks operate. That's how investors outside of trading operate as well. Real estate, you look at the percent on your return on your investment. Trading, focus on percent. Do you also wait for specific candlestick patterns as confirmation before entering a trade? Yes. I will actually, you gave me an idea. I will be doing webinars soon, maybe next at the end of this month on candlestick patterns. But I always look at candlestick patterns just because that is the best way to look at price action through candlestick patterns. If you can recognize candlestick patterns, then you'll know when to get in, where to get in, when to get out. You'll know what you're looking for. Maybe you were looking for buys, but then you have um a nicely bearish engulfing candle with three back-to-back bearish candles, which I like to call three gravestone soldiers. Now I'm not looking for buys anymore. Now, we're selling off most likely. Then we have let's say a morning star, which is a part of a candlestick pattern. Then next thing you know, morning star can lead to bearish activity. So also with candlestick patterns, it can help you get more of a precise entry. What day and time are the YouTube live streams going to be? So I have been going live on YouTube for the past month or two, and they are Monday through Friday, 8 a.m. Starting this week, guys, I will be going live half an hour earlier. So they will now be at 8 a.m. From 8 a.m. to 11 a.m. New York session, Monday through Friday, 8 a.m. to 11 a.m. Whether there's bank holidays or not, we'll still be there, because on bank holidays we can back test, we can go over trades, we can go over breakdowns and all that. What time frames do you use to analyze the chart and BOS? So I use the weekly to understand market structure and to identify market structure. Always the first thing I do is identify market structure. Then I go into the 4-hour, right? And the daily, and then the 4-hour. And then on the daily and the 4-hour, and sometimes even the weekly, that's where I'll draw my supply and demand levels. And then on the anything below the 4-hour is where I'll draw my support and resistance. Also, guys, to go back to this slide, when you're scalping, you're normally using support and resistance, and when you're swinging, you're more often using supply and demand. So that's why I always like to mark up on my weekly, daily, and 4-hour supply and demand levels, and then on the 15-minute, 30-minute, 1 hour, 2 hours, I mark up my support and resistance. Bro, you say SMAs, and you don't use that for the last weeks. I don't recall using SMAs at all. Well, I don't recall saying SMAs at all, brother. Oh, like you're talking about here. Yeah, it's somewhere here, I think. So I stopped using SMAs, moving averages. Um, I still have them in my trading view, but I have them turned off. Um, I've already simplified my trading. I've simplified my strategy. My strategy is very simple. It's 4-hour support and resistance. So it's I don't really how I'll turn my SMAs on when I'm looking for like that fourth or that fifth confluence. If I'm like unsure, or like I want to get that extra confidence on my trade, then I'll turn it on. But I stopped using SMAs. They're good, they're nice. There's nothing against them. I have nothing wrong with them, but it's just not part of my strategy anymore. For example, the daily and the 4-hour are pushing bearish, okay, or bullish. Would you trade against that? Well, it depends, right? If I'm swinging the position and we're respecting we're respecting our levels of support and resistance. Like let's say the daily and the 4 hour are pushing bearish, right? But we're failing to break previous lows and we're respecting levels of support, then I would trade against the bearish side. I would, especially if price action is indicating that we could possibly flip. Now, that's where I'll be patient and I'll wait for candle closures so that I can really get that precise entry and so that I can be on the right side. But always wait for candle closures too. Candle closures are a trader's best. A candle is a trader's best friend. Candle closures is key. If you wait for candle closures, and you'll get answers that you want to your question, right? If I see that price is bearish, right, and we're pushing bearish on the daily and the 4 hour, and we've already broken previous low, and we're starting to break support, I would not trade against that. I would rather miss the trade than trade against that, because there's a good amount of probability that my trade will not win. So guys, I hope all of you guys enjoyed it. I hope all of you guys really liked it and got something out of it. I hope you guys learned something out of this. And guys, like I said, if you guys want anything else out of this, shoot me a DM with ideas on some webinar ideas. I think the next webinar will be on price action and candlestick patterns. I don't trade GBP, JPY. No, I don't. I stopped trading that. I only trade gold and Nasdaq, and I look at the DXY as my inverse pair. Guys, take advantage of that one-on-one for just $24.99. I normally charge $100 for 1 hour and $150 for 2 hours for one-on-one mentorships. So it's just $24.99 if you guys want to get more in depth about certain things, whether it's candlesticks, whether it's supporting resistance, supply and demand, whether it's about my strategy. Take advantage of that price. Only you guys have access to that price. I have a couple some of you guys who have already purchased it, so I look forward to seeing you guys on the one-on-one later today. And guys, yeah, just shoot me a DM, letting me know how it went, what you guys if I was able to meet your goals, and what webinars you would like to see in the future. I hope you guys all have a great day, and thank you guys for being here. Remember, give yourself a pat on the back. Congratulate yourself for taking action on being better. All of this will pay off. So peace out, guys. Have a great Saturday and enjoy your weekend, guys. See you guys on the New York session live stream. Peace out, everybody.
Thank you, JP.
Of course, brother. And guys, remember this is recorded, so I'll be sending this recording out as well. If you guys all signed up to the Telegram link, I will be sending it there as well. Peace out, everybody.